Hi, welcome to another video. And in this video, we are going to discuss about a trading approach. And I myself consider not to be a good trader, so I've been trying out different methods which worked. Some works and some doesn't. And lately, it's going in a really good way. So this is one method you can I would say this is an approach you can introduce into your trading systems or whatever. So often we often forget, like we don't follow any rules, we just take random trades and expect something to happen. But most of you know already the story if we go in that line. So in this session, I'm gonna explain something. It's a very simple thing. It's not that much complicated, and it doesn't involve any technical. It's more on the like a control, like a system to check how are we going in the right direction. So let's get straight into it. Okay. This method is pretty very straightforward. So what the theme of the trade is start the day with a profit. Theme of the trade is start the day with a profit. Like we will take only 5 trades per day. That's one rule. Only we will do 5 trades maximum. That means 5 trades, and it becomes 10 orders and nothing more. And now the thing is we have to based on our capital we have to fix a profit that is very much comfortable for us. Like if you are trading on a 1 lakh capital, making 1000 or 500 should be very easy for you, something like that. That should be your target when you are making your first trade. So on first trade, your target is very conservative. It should be it should be very conservative means you have to be very precise about it. And as a trader, you will know, like you make 500 or 1000 on based on a trade, and an opportunity you saw. On the first trade you should be very conservative. So our risk class is like very limited. We should go for the minimum profit. And first after we make the trade can be profit or loss, right? So after checking if it's a profit, you can go for the second trade. And if it's a loss, then it is probably that our understanding of the market for the day is pretty wrong. We are wrong about the market. Whatever the assumptions we were on, or whatever that we are whatever our understanding of the market for that day is wrong. So better to leave that market. So if your very conservative trade is going to be lose into a loss, don't trade that for that day. Saving capital is way better. Like not trading at all is your course. Go back, read something, get updates about market. There is always tomorrow, so come back tomorrow well occupied and try to do. And if your second trade is and you make a second trade, and in second trade you can increase your risk a little bit more. Now that you have made already a small profit, you can go for a little bit more risk. Say if you went for 1% last time, then you can try for the 2%, something like that. Now increase the risk and see, you can end up in a profit or loss. So obviously after the trade you will be having either profit or loss, right? So if it's a loss, you should go back to the rule 1. Rule 1 means the next trade after the second trade, whatever the say you made the first trade, it became profit, and the second trade you made a loss. That means you have to go back to rule 1. Rule 1 is like make the next trade very conservative and follow this line again. It will go like this. And if the second trade is also in profit, you should go for your third trade. So on third trade, you should know that you can increase your risk a little bit more. Like if you are going for last time you went for 2%, you should go for 3 2.5, something like that. And at your comfort, don't leave that comfort zone of yours, but make sure that you can follow it. And if that also becomes goes into a profit, then go for the the fourth trade, and if the third trade goes into a loss, go to the second trade rule. Second trade rule is very simple. The risk should be only better than first trade. So though, even though your last profitable trade was trade was second trade, you should not go with the third trades rule. You should go for the rule that is that is belongs to the second trade. So second trade should be risk little bit better than the first trade, but not more. You should not trade the risk based on third rule. Okay, after that, if the fourth trade also becomes profit, you can go for the fifth trade. Sorry, if the third trade becomes profit, and you can go for the fourth trade. And fourth trade is like the maximum risk you can take for that day. I believe something like the risk reward ratio to be a bell curve. So the trade that fourth trades comes around like this. Usually if you are a person who waits for opportunity, it happens around 1 to 2 or 3 p.m. So in that hour, it's one of the best volatile hours in usually in market. So fourth trade is like the maximum risk you can take. After that, you should leave from the market. So if the fourth trade becomes profit, you can go for the fifth trade. But if the fourth trade becomes a loss, you should stop trading. The reason is, if you stopped at that moment, maximum you will be in a small profit or in a very minimal profit, because you already made two profits already, sorry, three profits. Then only you are taking that risk of the fourth trade. And mostly if you are doing the fourth trade, you will end up in a small loss or a minimal profit. End of the day, you are not losing much, so close the trade for that day. And if the fourth trade also becomes profitable, you can go for the fifth trade. If the fifth trade, fifth trade, you should go with the risk that is comparable to second or third trade. Even first trade is fine. It should be, the risk should be very lower. And if it's a positive stop for that day, it will be a reasonable return already on the capital you invested. And on the if the fifth trade becomes loss, you should stop obviously. And in this case, you will end up in a moderate profit, and moderate or very minimal. The chance of becoming lows in those kind of risk profile is very lower. So very little bit of say, suppose if the risk, loss happens, it will be a very limited risk. So this is the method, and it has been working really good for me. I hope some of you find it useful. And you should use this as a like a system, checking system. Like it's hard to control when you are on a profit streak. You want to trade more and more, but end of the day, that is not going to end in a good note. So that is yeah, that's what this method is all about. I hope you'll be finding it useful. And one thing, say some traders take 20 or 30 trades per day. I used to take like that. So for them, say even at times, what if you traded all the five trades and you are in a profit, and it's only say 12 p.m. and you want to trade more. So the approach that I seemed it what it seemed working for me was, I stayed away from market for 1 or 2 hours uh, from other works as well. So after that, I went into the evening session with the same rules again. I started with the first trade and second trade and third trade, so on. Maximum, sometimes we cannot find that many opportunities, because our risk profile is very different for this one and this one and this one and this one. So we can only get to the R2 after completing the first trade, right? First trade should be very conservative. So I'm looking for a trade that is that almost I have 100% conviction that I'm going to make money. And to find those kind of trades, it's not that easy. As you, as a trader, you may already know that. I don't know how to explain it. So whenever you hit your fifth trade, go back to the rule one and start from the first trade rule itself. So uh, over a time, what it does to us is like it's making us more disciplined. And earlier, I am not that much of a disciplined trader. I used to see opportunities and right away jump into it. Sometimes hands get you get your hands burned. Um, but in this method, I'm kind of able to see the risk to which I'm getting into. I hope this works for you as well. Feel free to comment. All the best.